Joining us now is Tony Tutrone, Global Head of NB Alternatives at Neuberger Berman. He runs NB Private Markets Access Fund. It's an actively managed portfolio of private and alternative investments. It's good to have you on the show, Tony. I want to start right there. Private markets, it's been a hot investment for a number of years. It's just more so as of late. We're seeing a lot of money going towards retail investors and individual investors and high net worth investors getting into this area. How are you positioning yourselves to capture some of those flows?
Yeah, first of all, Morgan, great to be on the show today. And you've been talking all day about the volatility in the marketplace and some of the lack of liquidity that's occurred. And that's been temporary, hopefully. But these are the kind of markets that really favor private market investments. When you have long-term locked up capital, that's very flexible, you can take advantages of parts of the traditional markets that fall away where the air pockets happen, and you can deploy capital there very attractively. And I think that's what you're seeing Blackstone and the other firms you talked about doing right now, taking advantage of the current opportunities in the marketplace.
Yeah, and you hear about that, right? That's part of the pitch, that like less liquidity, can't sell out on a down day. But less liquidity can't sell out on a down day. So it actually means that you trade that off for longer term gains, historically speaking. I'd imagine that's the situation now, and the argument you're making to investors now.
Yes, it is. I mean, I've been in private markets since the mid 80s. And private markets, in its essence, is about taking advantage of opportunities in the marketplace that other traditional capital can't. And so it's just given the long-term focus of the private markets. We're not interested in day-to-day volatility. We can take long-term view. And also remember, the companies that private equity invest in, they control. So they can add a lot of value to the operations as a private company that might be more difficult to do in the public arena. And so you're able to take advantage of all those aspects to create greater returns.
So where's the fund investing, and how do you decide whether to co-invest or whether to jump in on secondary?
Yeah, so great question. We manage about 120 billion in private markets here. We invest about 20 billion a year, and both very active in the secondary market and the co-investment market. On the co-investment side, we do about 50 transactions, 60 transactions a year with really great lead sponsors. And in the market right now, we're seeing great opportunities again, because with the lack of the IPO market, with constrained financing markets, private capital really has a role to play. And so we're seeing great opportunities on the co-investment side. I also think we're going to see a pickup in take privates with this volatility in the marketplace and some of the short-term focus of the public markets. Seen similar on the secondary side, we do have some investors that are over allocated to private markets, given the reduction in distributions that are coming back. And so they are using the secondary markets to reduce their exposure. This is mostly some of the long-term investors on the public pension side in the U.S. and some other places. And so the pricing in the secondary market is excellent right now. And also the secondary markets can be used by private equity firms themselves to access capital for their companies and to continue to hold companies longer than their traditional fund lives allow.